Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the weekly timeframes and the weekly closed position. What numbers we are looking to stay above, what numbers would be concerning for us, and all that good stuff. As I get into this video, if you find it useful and informative, hit that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe? You can always unsubscribe later. And if you haven't joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. It's the first place that we go to notify everyone of what is going on in the crypto space. So why not keep a finger on the pulse of crypto by joining us down in Discord? As I said, linked in the description below. Okay, let's make a start with Bitcoin here. Okay, we are going to take a look at a couple of different levels, right? We have the weekly chart here. This is using smart money concepts, and we'll throw a few other things in there. We then have a daily chart, and we're just going to review what's going on the daily. And then we have another weekly chart with some key support and resistance levels that we're going to talk about as well. Okay, so we're going to start things off on the daily chart. Okay, and we're just going to take a look at what has been going on here. Okay, so if I zoom out of this, you can see the big concern is that it's an ABC structure to the downside. We have a very choppy start moving to the upside here, and we are looking at a Z-wave function potentially as the kind of easier alternative to a C wave. This would be 19.7 down to about 12,525 to kind of complete a Z-wave structure. So we know that those things are still in play. We did have the higher high, higher low situation and a breakdown from it. Finding support on our 50 EMA briefly here. No closed positions below the 50 EMA, you'll note, and that's quite a strong thing to give us hope that if we were to close below this, then we go down lower. If we stay above it, then we're still looking pretty good. Obviously, the 200 EMA, which is our trend filter, is still down here, which means prices above. Giving us that idea that we're in a bullish market. I don't think that's actually what's going on. I think there's a lot of stuff going on in the background that needs to be kind of acknowledged. But for now, it's above the 200 EMA, and that kind of gives the bulls a little bit of something to go on. Now, ultimately here, we can see that this channel has kind of broken down. We did push back up, and we're outside of this again. This channel is not perfect by any stretch of the imagination, but we do have 2 touch points on the top, and we kind of lost the low here with only 1 touch point. So it's not perfect, it's not ideal by any stretch of the imagination. You can see it in there. Now, if I were to adjust this a bit, you can obviously see we had a couple of these little mini ones going on here. My concerns are that actually what we're really doing is a much bigger channel, right? And if I take this high up here and I throw it over to this high, you can kind of see it looking like this. We can tilt it in lots of different ways, but you can kind of get the idea here. I mean, even if I were to take it down onto these lows down here and try to get it a little bit more tilted, you'd kind of see that the idea that we are in this kind of big higher, higher low situation. And unfortunately, this being a pretty big bear flag, if we were to consider this from the 69K coming down here, all being your pole, the moving to the upside, this being your flag situation, looking for that move and that break to the downside. It doesn't give me a lot of confidence at the moment, but we'll see how that kind of develops over time. In terms of key levels on this daily chart, I guess really the main things that we're going to be looking for is staying above our 50 EMA for now. If we want to be bullish on the market, that's going to be your #1 priority, staying above 27,652 on the daily chart. Closing below that number could be seen as a bearish tell, so we want to be a little bit cautious there. Ultimately, the 200 EMA is the main one, and that's currently down at 24,275. However, you've got to bear in mind that these are laggy, as in they only show you what's already happened over a large period of time, 50 candlesticks or 200 candlesticks. So considering prices moved up recently, it's going to give us a bit of a tilt on these EMAs, making it harder, making it easier, in fact, for price action to slip below them. Okay, so be cautious here. Okay, everything when it comes to MACD or EMAs, SMAs, MAs, they are all just showing you what's already happened. Okay, and people will react to that. And it can be slightly predictive, but it's not going to give you, concrete evidence that you're going to be in a bullish or bearish market. We use those as information to say over an average period of time, the current price is either below that average or above that average. Okay, so on the daily chart, we've got those things to kind of consider. Okay, so at the moment, we can see here we are back in a higher high, higher low situation, and I do think that's likely to break down as per the micro movements we spoke about earlier today. So coming over into our weekly time frame and looking at smart money concepts, we can see there's two fair value gaps. These fair value gaps are created through imbalances in the order books. Okay, so essentially down here at $17,000. A really large order came in. Okay, that large order was unable to get fulfilled. Okay, or multiple large orders were unable to get fulfilled because there wasn't enough people selling the Bitcoin inside this little gapped range. Okay, this means that price jumps from the low side to the high side. The problem that we have with this at the moment is that this imbalance in the order book is normally kind of a tell that smart money has entered into the market. Now, when you have this jump, normally what you would expect to see is the institutional players or the smart money turn that money tap off because they wanted to buy at they went to buy at $17,000 but ended up paying $20,000. Okay, they're not going to continue pushing that price upwards. They wanted to get it at 17K, not 20K. So typically what you tend to find when you see these gaps is that the money tap is turned off and price falls back down into the gap. It falls into the gap because there's no more buying pressure and there's just selling pressure as price reached up into those higher ranges. So price starts to fall back down into these lows and then it gets scooped back up again from those smart money funds. Okay, instead what we've seen in this particular case is a continuation of this push to the upper side. Again, another fair value gap here at $22,500, yet the orders were completed at approximately 26,600. So we know that there's some interesting kind of movements going on with price. You don't stack these up the way that we have been for no apparent reason. This, to me, seems like a very manipulated market with smart money pushing the price upwards, creating FOMO, and yet we are yet to see these gaps get filled out, which, for the most part, I am expecting to happen. Now, if we take a look at the history of this weekly chart, do you see any fair value gaps remaining? We do not. Okay, this is interesting to me because essentially any gaps that were here previously have already been filled, and these are the two that remain. Now, this is not looking at all of the history. The further back in history you go, you can find gaps in the very early days. But in most recent times, these gaps have been filled out. And so I suspect that we do have to have a move to the downside at some point to fill those gaps and get that balance back in place. Okay. Now we can see equilibrium is slightly higher. This was the highest expectation I would have had on the surge to the upside, 34,000. And you can also see this kind of being around that resistance as well, potentially possibly 36 if we wanted to find a harder resistance, maybe 38. But equilibrium essentially is ranged at $34,000 to $38,000 and would have been a big major resistance for us, but that's not really where we found the resistance at the moment. We have found resistance right up here on this higher range and the previous areas of demand, which I'll talk about that in a moment. Now, when we throw the Gaussian channel on, the Gaussian channel has historically been a pretty good and accurate way of predicting out the bull markets and the bear markets, and right now it's predicting to us that we are in a bullish market. I do suspect, however, we're getting a false signal here, and I am concerned that that's the case, although I'm hopeful that it isn't and that we are in fact in a bullish market, and maybe I'm just wrong with some of the other assumptions that I'm making around, the participants, who's buying, who's selling, and various other pieces of data. Ultimately, though, I am concerned that this may be leading people down the wrong path, and we are rewriting Bitcoin's history. The Gaussian channel has been very predictive in the past previous bullish and bearish markets under very strict circumstances. The data was pretty much the same from an underlined and underpinned point of view. Essentially, we had stayed above critical levels like the 1.236 fib levels, and this time round, however, we actually went down deeper than the 1.382, and we've seen new lower lows and below the previous all-time high. We've done a lot of things new in Bitcoin's history that we have never seen before. So to look at an indicator like the Gaussian channel and think that it's still doing the same predictive capabilities with different variables, I find quite hard to believe. And therefore, I am concerned that a lot of people will look at this and think that we are, in a bullish market. The Gaussian channel has confirmed it. And, we can now talk about going to the moon. As much as I want that to be the case, I suspect that actually we're about to get a false signal for the first time on the Gaussian channel, like we had seen many times with other indicators during the June through August period as well. So here we are with it, right? What are the key levels on the Gaussian channel? Well, the high that we would like to break above would be 31,017. Okay, that would be basically getting a close position above that, gets us above this Gaussian channel, and would be pretty bullish, and I think, you know, that would be a pretty good thing to see. With that being said, on the low side, right down here at the bottom, at the lower end, if we were to come down lower than the Gaussian channels, or come out of the Gaussian channel to the downside, we are talking 21,389. The main support level that we're looking to hold, if we want to remain bullish to a point, is going to be 26,203. If we close below that, I think we're going to have a difficult time getting back above this Gaussian channel, but it'll be interesting to kind of see how that plays out. And essentially, you know, we've got the 200 and the 50 EMA right down there in the Gaussian channel as well. So caution here a little bit. It is interesting. We could be, you know, seeing a bullish market here, and the Gaussian channel is the holy grail of indicators for bull markets and bear markets. Or alternatively, with all that new variable data that I've spoken about before, is playing a trick on the Gaussian channel, and the Gaussian channel actually now has to kind of rewrite its own history as well. It'll be interesting to see how this one does unfold. Let's move on into our key areas of support and resistance. Okay, so as we were talking about, we had this previous area of demand up in this range here. This is basically 28,000 to 31,000, and we can see that this is now turning into a supply range. This is where the sellers are at the moment, and so again we're talking 28,000 to 31,000. If we close above this level, that would be a pretty bullish tell as well. So if we were able to close above 31,848, that would potentially give us a bit of hope that, you know, we may be turning this or burning through the supply within this range, allowing us to kind of push on through it. I suspect that that would not happen, and we'd still get rejected. There's still a lot of resistance right up in here, specifically around that kind of 32 through to about 36, which does happen to coincide with our equilibrium quite well. So we do want to be a little bit cautious with some of these things. But for the most part, it is very, very interesting to kind of see previous demand turn into supply. The levels to the downside haven't changed. We're talking 24 to 25k. That's the first area that I would think would find support on, and that would be below the 50 EMA but above the 200 weekly EMA. And dropping below the 200 EMA, I think we'll probably have to target out that $20,000 to $21,000 range. And if we were to lose that, then we're talking about 17 to 18, right back down in here, and then, you know, right down testing those lows again. So you can see that there's a bit of a rhythm and a rhyme to where you'd find the support and the resistances. And if we were to try to push on up, where are those major resistances? Well, we're talking 36, and probably have to talk about 30k being tested as support before potentially rallying on up higher. We'd find ourselves with more resistance right up towards the $39,000 to $40,000 range as well, but I wouldn't think would go that high straight off the bat. We just tilted down on the stochastic RSI on the weekly, but there's still a lot of progression to the downside there. So again, we're not talking about big moves to the upside at this point in time. But you know, we never know. This is crypto. Anything can happen. Let me know what your thoughts are in the comments down below. I'm going to leave this video right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new, subscribe. If you haven't joined us in Discord and you're missing a trick, check it out. Linked in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.